Welcome to the RTX Corporation Q1 2026 earnings review. Our record backlog, double-digit organic growth, and raised full-year guidance show our momentum across commercial aerospace and defense heading into 2026. RTX delivered a strong start to 2026. Adjusted sales hit $22.1 billion with 10% organic growth. Adjusted EPS rose 21% year-over-year to $1.78. Free cash flow was up $500 million, and we achieved a record backlog of $271 billion. We raised our guidance metrics based on defense strength and execution. Adjusted sales are now targeted at $92.5 billion to $93.5 billion, and adjusted EPS is $6.70 to $6.90. This is driven by defense demand, commercial aftermarket durability, and the GTF original equipment ramp. All three segments achieved broad-based growth. Collins Aerospace saw $7.6 billion in sales with 10% organic growth. Pratt Whitney delivered $8.2 billion in sales, also with 10% organic growth. Raytheon recorded $6.9 billion in sales with 9% organic growth. In Collins Aerospace, we achieved margin expansion despite mixed headwinds, with $7.6 billion in sales. We saw 10% organic growth, driven by a 15% increase in commercial original equipment and 9% growth in defense revenues. This reflects strong margin resilience and a robust defense portfolio. Pratt Whitney generated $8.2 billion in sales with 10% organic growth. A 19% surge in commercial aftermarket drove a $121 million profit lift year-over-year. Military grew by 7%, while commercial original equipment saw a modest 1% decline, expected to ramp up later in 2026. The GTF fleet recovery is on track. Aircraft on ground counts related to powder metal issues are down approximately 15% sequentially, supported by a 23% year-over-year ramp in MRO output. Raytheon saw munitions output up over 40%, expanding margins by 150 basis points. They secured $6.6 billion in new awards. Investments are ongoing to expand munitions capacity and capitalize on structural defense demand. Structural defense demand is driving durable upside due to geopolitics. Our integrated air defense, precision strike, and counter-unmanned aerial systems portfolios are critical strategic requirements for U.S. and allied governments. The commercial market shows durable demand despite geopolitical noise. Legacy platforms, like the V2500, maintain consistent shop visit activity. Narrow-body production build rates are ramping, supporting Collins and Pratt Whitney's original equipment deliveries. Operational innovation drives throughput acceleration. Our Singapore MRO facility uses advanced robotics for a 100% first-pass yield and a 50% cut in assembly time. We are also leveraging digital analytics to target 60% coverage of manufacturing hours by year-end. We have paid approximately $500 million in prior IEEPA tariffs and are seeking refunds, though no income has been recognized. Our mitigation strategy includes supply chain adjustments, customer pass-through clauses, and the potential for refund recovery, which is not reflected in current guidance. Key takeaways from Q1 2026 include a record backlog providing deep revenue visibility, raised guidance based on proven execution, and GTF recovery on track. Defense capacity offers a structural advantage, and our innovation pipeline differentiates long-term margin expansion.